Metallica. Boom, 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 boom. Yep. Well, hey, good morning, everybody. It is the 16th of June, 2015. That makes it a Tuesday in the part of the world I'm sitting in. It's just after 7:30 in the morning, New York time, 2 hours before the stock market opens for trade. Nice. So we had an up, down, turn around kind of day. You know what? That happens. We have event risks on the calendar, as you know, this week. Euro started out the European session, as you can see, have it in sort of a pinkish color. The London session opened up like this. The first hour or so. Cool. I was long about here, which is fine. And it went up, and I had 25 locked in here, and it hit 50, and I went back to bed because, I'm like, you know what? So I entered like at 2:15, and by 3:30, I'm like, I can go to bed. Because it was either going to go or it was going to go like it did. So it was a 50-50 chance kind of thing. One of the major reasons overnight for this to come down from euro to go strong to weak is one of the questions that was on the table was whether or not quantitative easing was legal in the Eurozone. The court system said in January that, yeah, it might be legal, which was enough for ECB to move forward. And then right about here, the report came out and said, yep, sure enough, it's legal. You can go ahead and continue to buy bonds. When you buy bonds, the currency depreciates. Well, you buy bonds, money supply increases, interest rates fall, and the value of the currency falls with it. So anyways. Yep. The way I played it, though, risk management-wise, is that just in case there was an issue with the legality of quantitative easing, I put my stop like kind of way up in here so that it could go. So even though this is, well, see here, 90, well, at the time it was about 70 pips, if I remember, which is a pretty decent London. Okay, that's a pretty decent range for the London session. I thought, that if there was a challenge, it would go whack and go up, hit a psych level of 114, and just pick up some quickies, but nah, whatever. So only made 25. Boo-hoo. So that's that. So that's interesting. The rest of the other news is just noise. More Greek stuff. Fine. It's all chatter. None of it is really interesting. Just messes things up. Let them work it out. Okay, let them work it out. There's some other things going on. German zoo, basically as expected, fine. CPI stuff, basically, out of the UK, basically as expected. Wait, PPI was off. But whatever. Like I said, when we went through the yesterday, all those other events, UK PPI, for example, all right, UK CPI, all right, these things are important, but nothing like all the central bank news that we have this week, and then that just trumps everything. Just we'll deal with the misses on headline numbers, some other time. It's just this stuff's way more important. So we'll get going. We'll do some technical analysis. We'll go through the charts. We'll look at some trades. We'll take some trades. We'll set up some trades. I don't know. Let's do some tradings. Let's go. Oh, Chapa asks a great question. Why did I go long right here? Right, because it looks stupid there, right, Chapa? Well, let me say the disclaimer. Let me remind you that trading and investing is risky, not appropriate for everyone. Your past performance does not predict future results, good or bad. So stay small, stay humble, focus on the long term, never risk money, gonna lose. Don't touch the stove, it might be hot, you'll get burnt. Let me tell you. Let me tell you. Hang on. Do I have my? No. All right. Hang on. Let me open up my editor, my image editor. Boo 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 boo. Well, I wish I could open this up somewhere else. I guess I have it saved. Hang on, I won't do it from the editor because there's too much stuff going on there. Hang on, I believe I saved it. Beep. Pictures. Put a picture on my wall, and it reminds me that my trading's not so bad. It's not so bad. 'Cause there's always someone that sucks more. Alright, hang on. Blog posts. What is it? June. Alright. And I believe this is it. Wait. 10,000 windows open. Yeah, it looks right. We'll take a look. 6:15 at 2 something in the morning. Alright. At 2:44 a.m. Is that specific enough? It's opening up. Hang on now. There you go, Jabba. Beep. See, it's nice to have a record, isn't it? So, at 2:44 in the morning, we were at the, boy, it's hard to see here. It was actually right here, the hourly 21 EMA as dynamic support. So you can see it right there. We came down, we touched it, and we went and then I hit it, plus the spread and stuff like that, so that put my long there. My initial short was, I don't know, typically it's like 33 pips away or something. I think it was 40. So I was in at 70, my stop was at 40. Wasn't really great because this weekly was there, but I just wanted to be below the 382 and I wanted to be below the central pivot. And, you know, typically, like, it must have been about 4 minutes later, I moved my stop to here, which was only minus 10. And another 4 minutes went by, I locked in plus 10. 10 minutes goes by, I lock in 25, and I go back to bed. That's how I remember it, something like that. So you see on the 4 hour, up, 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 down, down. There's, you know, the central held up, the psych levels held up, so the plan was to take it north. You know, I thought it would come up and come down and then go up to the next level. And so generally speaking, it was right. What I ended up doing is locking in 25 and then moving my limit order farther and then just go to bed. So I took it from like it was essentially a 3366 OCO. And then I took it from that to plus 25 to plus 125. Because I figured, you know, I don't know, I'd rather make 125 than 50. Okay? And according to this was as you can see on the file and name, I think you could see that June 16th, 2015 at 2:44 and 32 seconds a.m. Does that help, Chubba? Cool. And at that point, it was sort of hero or not zero, right? Hero or plus 25. Oh well. Guess I could have got out, but you know, 50 pips wouldn't have changed anything. So whatever. To me, 50 pips is like a break even. Whatever. So, all right. So I guess I should introduce myself. My name is Wayne McDonell. I'm the Chief FX Market Strategist. I'm over here, actually. Boop. Hello. Boop. These videos, every single day, I record them and I put them up on youtube.com/c/TradersWay. We have a standing rule here in our community. If you watch the video, please leave a comment. Let us know what you learned, what you like, what your takeaway was. And it's a way actually for documenting to yourself what you learned and what you took away. So it'd be very, be appreciated. Now let's say your house is on fire while you're watching the video. Look, at least give it a thumbs up, give it a like or whatever it is. All right, I mean, come on, some feedback. Yesterday's video was 1 hour and 32 minutes long. And then it takes me another half an hour to prepare it and to upload it to YouTube for you. So it'd be cool if you could like leave a comment. I don't think that's asking too much, is it? Hope not. Anyways, like I said, my name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay. Thank you for being a client. TradersWay is an ECN. You trade Forex and binaries. There's futures and options, so you can do things like gold and oil and all that kind of stuff. Beep, 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 beep. I like my hat. I like your hat. So we do these sessions every single day. Like I said, I promised you 7:30 in the morning at 8:15. We did an hour and a half yesterday. We just got on talking like a gaggle of geese. So we did yesterday, we did the commitment of traders report, we did the calendar, and a bunch of other things. I think I covered 7 topics that day. So anyways, let's get going. Today, I think we should just focus on technical analysis, if you don't mind. Okay. So this trade opportunity, do you see what's going on here? Yeah, Mark. Yeah, Mark. I think you're talking about this, right? Is that my desk at home? Yeah. Yeah, but you only see, what is that, 12 screens? I actually use 18. So I just can't fit them all in that picture. But you get a sense of it. Yeah. That's not crazy. You crazy. I like you. You crazy. All right. So piggy. Okay, we could do a piggy, but I just want you to see that there's a clear, obvious trade right there, right? And just boom, should be free money. Okay. So we want to do a pig. Boop. Piggy, 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 can't you see? Sometimes your trades just hypnotize me. Oh yeah, it's down here for some reason. And I just love your Forex ways. Guess that's why they're broken. You're so paid. All right. Okay, little piggy here. I suggest we get off the 1 minute. I'm going to make this a 15. I always check my time frames. 15 here, hour here, the 4 there. Cool. Everything's good so far. Got some related news coming up. Okay, building permits in 42 seconds. Housing starts in, minutes, 42 minutes. Housing starts 42 minutes. All right, so obviously all at 8:30. Fine, cool. British pound seems to be going up. Let's identify resistance. Boop, boop, boop. I love that. You see all that? Boom! I say let's find some resistance. You see that? And all of a sudden, boom, boom, boom. All these lines show up. I'm like, yep, that's how I do it. Okay. One thing I note right off the bat. This is a 50% retracement from yesterday's trading range. So if yesterday's low was here, and yesterday's high was here, then we've pulled back to 50%, and it seems to hold, which then would suggest that it would do this. What do you think? Oh, why is it going up? Because there's more bulls than bears. Okay. Also, if you were looking at the US dollar index, yesterday we had a big down day. So let's do like this as a daily candle. Then today we've made a 618, and the dollar index is kind of doing this now, which means it could do that, right? So here's yesterday, and then so far today, and then who knows, okay? So that could give some weakness to the US dollar. Piggy goes up, okay? Let me back up. That's a 5-minute chart. You probably want some more time. So this is what I'm talking about here. Okay. Yesterday's low, yesterday's high. Hammock. Battle stations. Boom. Okay. That's why it went up. Down. Up. It's just how I teach it. No, it went up way before that. What do you mean? Marcia says FOMC will give a pullback. Well, it depends on what they say, right? So they would have to say something bullish for the US dollar, which means they're going to raise interest rates at the next meeting. If they don't say that, then that could provide dollar weakness. Now you said it went, how did it go up before that? I mean, that? I don't know what you're talking about. I mean, it's an uptrend, right? Up, down, that's a fib, right? Up, now we're in a range, high, high. It's one way of doing it. You could do it this way. The uptrend is struggling. Well, on this time frame, which is the 15-minute chart, it doesn't seem to be struggling at all. Okay. For example, if it was struggling, let me draw this. It'd be like this. Okay, let's say a full cycle up, full cycle down, full cycle up, right? Full cycle down. Then it'd be like three-quarter cycle up, kind of like maybe full down, and then sort of a top. Okay, that would be struggling, right? But it seems like it's holding the channel just fine. Pound is very trivial. Yeah. Yep. But you remember, a lot of this has event risk associated with it. We talked about it yesterday. MPC meeting minutes, for example. Carney was speaking, was it yesterday? I think it was yesterday. Draghi was speaking yesterday. Oy vey. I mean, there's incredible amounts of event risk associated with this pair right now. Okay? But I think it's holding its line just fine going up. So if you were a bear, okay, how would you trade it? Maybe that's a different question, right? Marcia says, the Carney's dovish. Really? I see him as hawkish. But, you know, it's opinion, right? That's how I see it anyways. So if you were going to trade to the downside, okay, I would look for something like this. Hang on. Higher high, higher low. Okay? Higher high, higher low. Higher high. That is a big low. That is a red flag here. Higher high, higher low. Higher high, low, lower high, lower low, lower high, lower low. I'd look for something like that. My first short would be about here. And I would kick it off of this neckline. Okay. You could try to play it, be a little smarter in the market, play it off of the shoulder and not the neck. To each his own. Okay. Well, going back to the Carney and the inflation report, we knew it was bad. It was bad. The report before was bad, and he said, I think the same thing. Last time the numbers were pathetic, and he said, don't worry about it. And Carney is a conservative central banker. So if he says don't worry about it, it's important. It's not just him playing some political game. He's not even English. He's Canadian, for crying out loud. He's not playing some weird political game. He's calling the shots as he sees it. And he doesn't look at the market as a 6-month issue. He looks at it for over 2 or 3 years, right? They look at a 2-year outlook and a 5-year outlook. So anyways, he's like, don't worry about it. In a year from now, all this deflation that came in from collapsing commodities, will be all washed out. And money exiting the Eurozone's going to probably come to London, right? So he's just like, don't worry about it. Don't worry about what happened last month. And so anyways, May just came out, and he's still like, the numbers are pathetic. Don't worry about it. Right, so for someone being so conservative, right, Marcia, for him to be so conservative and he says, don't worry about it, that's hawkish in my opinion. Okay? So anyways, right now it's going up. That's all that matters, right? Right now it's going up, and wait for it to reverse if you're a bear. Now you can go to a higher time frame and try to figure out where that might occur. Okay? But let's take a look here at my secret indicator. Bearish, right? Bearish, 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 neutral, bullish. Yeah. Right? You see? Huh. Okay. Of course, you don't need a magic indicator because you just say, that. I mean, it's pretty obvious. Whoop. So, yeah. So right now it's, I don't know, it's a lot less bearish than it used to be. What is this thinking? But it's, yeah. It's the stupid thing. See, I try to stay away from tools like this because what happens is you start worshiping them like they're golden oxes. And you forsake your hard work doing the technical analysis yourself. That's a moving average of the central pivot point. But whatever. You don't need that. So the question is, where would it go? Okay, well let's zoom in here, and then zoom in a little more. Well, just follow the channel. You can use the pivots. There's a pivot cluster here around 57. Okay. Now you say it'll do it without retracement. I don't. I never think it'll do things without retracement. I'll say it in a different way. I always plan on retracements, but I'm very rarely wrong in that scenario, unless some news generated something crazy, right? But look, let's say this, this, okay. Then we got to pull back into the channel. And I'm going to fib that distance now and create a new trend. So maybe it's a faster one now, but I'll go this color. So let's make it down to about here, and then up. Okay. And we'd have to, so I say create a new one because what will happen is, we start moving, you'd connect that bottom, all right, and you'd connect this top, and you'd have sort of an increase in velocity, if that were true. Okay. And then I believe this area I've already picked out is going to be a huge concern technically, based on price, not just market. And here be a real challenge. So if we're just going to look at it with less price action because of the time frame, I would think sort of like you could even stay in the channel, okay, and then maybe a breakout. And I don't see why it couldn't reverse here. I'm not saying it will, but you can plan it out all kinds of ways. That's how a bear would look at it, okay. But you could break it out a little more quickly, kick off the top of the channel, and then hit here. But then I'm still going to think it's going to reverse there. Why? Because they're reversal pivots. If I don't think it's going to reverse at the pivots, I should just get rid of the pivots. Okay. So what were you doing Monday morning at Auckland Open? Look at this. The indicator already said bullish. Okay. But since the British pound versus the US dollar had been going up for 2 weeks straight, I don't see why you would need such an indicator. If you want to use Fibonacci to predict the next high, we'll use that technical indicator. 50% predicts somewhere between the 382 and 618. So we'll play it conservative and do the 382. And that puts us at 6284. Okay. I know there's a lot of funky lines on there, but let me just draw it. So Leonardo Fibonacci suggests this. Okay. I think there's going to be a lot more challenge than that. Take care, Alan. By the way, how's it going, buddy? Send me an update. That's Mr. Greenspan, everybody. So yeah, so we'll see. We'll see what the Fed does, the FOMC, but I don't know what the Fed's going to do, right? I don't think they're going to raise interest rates. So there you go. So that's the pig. Pig's fine. I'm eyeballing Aussie dollar. Beep. Are you eyeballing me, boy? No, sir. Yeah, I'm thinking next year, Marcia, but that's what I told you last year. Right? So I haven't changed, but NFP has been a good trend, huh? But I still don't see much inflation. But boy, that'd kill China, wouldn't it? I think at that point, China is going to have to change their central banking policy and widen their band, and they're going to have to get off the peg. Think about it this way, guys. If the Fed raises interest rates, the U.S. dollar gets strong. The Chinese currency is pegged to the U.S. dollar, and it will also get strong, which makes them less competitive, which slows their economy down, which means more Chinese workers are unemployed. Did you ever think of it that way? Yeah, well, why is China, so Mark's like, but China's already struggling. Well, why is it struggling? Let's talk about that, baby. Let's talk about Euro, yeah, USD. Let's talk about that, baby. Let's talk about Euro USD. Let's go back to that one. You know, I probably could have just used the Aussie dollar. You know what? Let's just go back to the Aussie dollar because I want to do the analysis there. Anyway, sorry about that. By the way, there's the trade. Easy peasy. You should be like printing money at this point. Good. All right. Let's do it this way. Let's do a simple template. Do a scanner. Go out to daily. All right, fine. All right, so what, since July of 2014, has the US dollar gotten strong or has the US dollar gotten weak? Strong. The Chinese currency is pegged to the US dollar, so the RMB, the renminbi, the yuan. It also got strong. What happened to the Chinese economy during this period? Do you think there could be a real, do you think there could be, are they related, is what I'm trying to say? Or is it a random occurrence? Yeah. It's interesting, right? Definitely, 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 definitely related. Okay? Because at the same time, Australia can't afford to buy Chinese products because their currency has fallen relative to the dollar. So you're looking at Aussie versus USD, but this could be how do they put it on trading platforms? Is it CHN? I think so, right? It's not RMB. It's not. But anyways, so China US dollar, I think it is, right? It could be the same. But China's largest trading partner is Europe. Europe buys more junk from China than even the United States of America. But the population of the inflated Eurozone is also larger than the United States, so it makes sense, right? So the Europeans have less purchasing power. And so now the Europeans can't buy so much, and the Aussies can't buy so much. And I'm pretty sure the British pound did the same, right? So all these countries now, okay, so we'll just leave it there. I think you get the idea, right? So what happens is the Chinese currency goes up and the dollar goes up. So the Europeans can buy less stuff from China. I'll do it that way now. China, oh wow. I wish you could type on here, right? You can change this from Aussie USD to Aussie, all right, CHN, I think it is, right? And so all these economies cannot afford to buy as much from China because the Chinese currency, the Chinese exchange rate, gets less and less and less and less and less favorable as these currencies lose value and the US dollar gains value. Is it C? That's right. CNY. Thank you. I know. I always wondered why it's not RMB, but anyways. But you see what I mean? The exchange rate is killing them. So what has China done in response to their overvalued, not overvalued, but let's say more fairly valued currency? They do things like cutting the RRR. Okay? They did it several times. When was the last time the United States changed their reserve requirement ratio? $1992. China's done it several times this year. And why hasn't the Fed changed the RRR since 1992? Because cutting the RRR or changing the RRR impacts the money supply, which we'll define as M1 and M2. The M1 and M2, well, I guess M2 is the M1 plus M2, money supply. When you change the RRR, its impact on the M2 money supply is like a nuclear bomb. Boom! The economy goes crazy. As every bank instantaneously has to adjust, and it's chaos. It's bedlam. It's mayhem. It's a cornucopia of curious. I don't know. It's a big deal, and that's why they don't touch it. Why did China do it? Why did China do it several times? Because all their trading partners, right? Their currency. So okay, so what do we do? Okay, so yen and euro and dollar and Aussie and CAD dollars, right? Those there. And how do you do pound? It's the something like that. I don't know. All there, right? Well, you got to take out U.S. dollar. Okay, currencies generally have lost their purchasing power when paired against the U.S. dollar. So the purchasing power parity of these currencies diminished in relation to the U.S. dollar. The U.S. dollar went up, and because the CNY is pegged to the U.S. dollar, it went up. And so it's the perfect storm of China's main customers outside the United States can't afford to make purchases from China, and Chinese factories slow to a screeching halt. And masses of millions of people that were pulled out of the farms to work in factories are suddenly sent out into the streets. And what if they protest because they can't afford housing and food and all these things, and there's no work, and the government promised them work? All of a sudden, the political parties are in trouble. What do you do to save your skin if you're the leader of the Chinese economy, the Chinese capitalist communist economy? You do whatever it takes to save your skin, and if you're going to drop an economic nuclear bomb on your economy, you start slashing RRR like no tomorrow. Okay, and you increase your money supply by probably 50%. Okay, money goes up, right? If this goes down, supply goes up by 50%, all right, to create inflation and lower the value of your currency and anything you can do. I don't know. So like I said, I think what they want to do is they actually want to start floating that sucker in wider bands so that, you know, one day, maybe 10 years from now, they get rid of the peg. But they got a long ways to go. They need a better legal system. They're going to need a bond market. They're going to need a free-floating currency. They're going to need an independent central bank. They're going to need an interbanking currency system. You know, that's what we do, right? We trade in the interbanking system. Well, banks trade with each other all day, every day in the interbanking system. And it's a necessary requirement to do all these things we're talking about. And they're 2 generations away from that. Yeah, Igor says China's not a democracy, so protests, they don't care. Yeah, well, if they lose their jobs, they care. All it takes is a revolution. All I got is a red guitar, 3 chords and truth. All I've got is a red guitar, the rest is up to you. All right, so anyways, so that's what's going on there. Aussie dollar, let's go back into this. 15-minute, make that a $5. All right, so yeah, let's change the temp here. So what do you want to do? Well, where's the high side? Okay, fine. Where's the low side? Fine. Where are we going? Well, we either hit a new higher low bottom, and we have a trend like this going, and if so, the idea would be back to 77 or maybe 78. Okay? If you think we're going to head down to the 77 or 76 and a half again, then what you're going to try to do is down, up, and down. Okay? Hourly says up for 8 hours. So that tells me what? Couple of things. Seems to me it has a reasonable chance of going up to the top side again. And then right around the Aussie Open, we take it down to Chinatown. Because then it'll be down for 8 hours. So up for 8 hours, down for 8 hours. Sounds like a round trip. What do you stink? Smell like a plan? Yeah. Hey, Baltic Dry Index up again. 3.8% today. We're working our way up all the way up to almost 700 on the Baltic Dry Index. It's supposed to be 3,000, but it was 500, so 681 today. Well, it's better than 500, I suppose, right? Just amazing. Just 6 months ago or 9 months ago, it was 2,500. I think it was 2,500. Well, certainly 1,500, but now it's only 680. So just it fell so hard, so fast, just ridiculous. Igor says, "Oh well, look good." Igor is asking good questions. Thanks, Igor. Igor, this oscillator here says down to you. Oh, the moving averages? Aha! Okay, the moving averages. Good question. Are we trending up or down? We're trending sideways. Hello? We haven't made a higher high in like 3 weeks. So you don't use your moving averages, you use your oscillators. You don't use Fibonacci either. No, it's not up, Mark. It's not up. I asked what direction is the market trending. It's not trending up. Now you have green candles, action's moving up, but it's no trend. It's just price action. Well, all I said was up to resistance and down to support. You know, I'm not going to get the Nobel Prize of Economics for that. It's going to stay in the range until the range breaks. Where's the range going to break, up or down? Well, how the heck would I know? Genius, genius, genius. Right? Come on. How would I know? All I know is how I'm going to behave. That's the one thing I can control. I can't control time or price. But I can I can say where and what. Okay. So there we go. So this is the only thing that's happening to me. Now, if you are a bear for some reason, now one of the reasons was wasn't Stevens. It was one of the other RBA dudes. It could have been a Sheila. I can't remember, but I think it was an RBA bloke, and they said it's not worth 77. What? Okay, fine. But I still think you could do this, you know, I don't know. So, like I said, I don't know what it's going to do, guys. I don't know where or when. My bias is, sell it high, generally speaking. But, if price done this, then the reaction is to buy it. And if it breaks lower, the reaction is supposed to sell. I mean, that's what you're supposed to be doing. And when you're in the middle of the range, you're not supposed to be trading at all. So that's why I'm like, well, this wasn't a very much of support. I would have liked to have seen 77.09. Okay, so not a very good support. So what does that suggest? It suggests we could be in something like this. Okay, agreed? You might like the direction, but it seems, I don't know, relatively reasonable. Okay, so if that's the case, what's the predominant move is up. Now you're saying, well, that's what I'm saying, Wayne, I'm a bull. Well, no, you're buying off support. The market's not bullish. All right, because that's a bit of backfilling here. That's not the greatest trend in the world. So I could say, if you're going to follow this oscillator to the top of the range, that's a logical decision. Okay? You're trading the oscillator. You're not trading the 5.8. You're not trading the 21.55. You're not, I mean, that's it. That's all that's going on. And you can't predict that it's going to break out of the range because that would be a gamble. It didn't break here, it didn't break here, didn't break here, didn't break here. Oh, but genius, genius, genius says it's going to break, right? Dude, you don't know. You're just ignorant. You're just ignorant, right? So let it come up here. That's going to take about 8 hours, so 8 more candles here. And then what? London will be closed. New York will be faded out. So, I think this would be cool. Up, sideways for almost 16 hours, and then London open. Boom! Hoo-ha! But I actually want this to come down. I mean, if you actually ask me. You never asked me what I want. That's kind of what I want. But that hasn't been signed, sealed, or delivered. Okay? So, I don't know. So, how does that feel? I don't want to look at 15-minute. Igor's like, look at the 15-minute. I don't want to look at the 15-minute. So, Igor is looking at an oscillator that's up here. Okay? Then time that together. Why not? Because I've already made my decision. Why do I need more? My decision is price will be higher 8 to 12 hours from now. No, I'm only talking strategy, Igor. Okay. Why 1 hour, not 4 hour? I don't know. This looked good to me. Because all of this other stuff is noise, guys. This is the most important. Support and resistance. Okay? This is the major thing going on here. Don't even look at all this other stuff. It doesn't exist. Put your blinders on, guys. Okay? That's all I see. I don't need to see anymore. If it breaks higher, I'll change my strategy from sideways to bullish. If it breaks lower, I'll change my strategy to bearish. Okay? But right now, that's that. That's all I care about. More information is not going to help. Oh, but, right? And then you get caught in that sort of thing, right? Oh, but it could go up, but the 4 hours is down and the hours is up and blah, 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 blah. Look, if you're going to scalp it, take the shot down to support and then swing it north. I mean, that's your tactical decision, right? It's not a complicated one. You know, it's not my job to put you in trades. But if you're a bear, this should be easy, right? Trade it down here, and then now you got congruency so that your 1 hour should now go up off support and your target 77.77. Okay, that's easy if you've made a decision strategically. But most people haven't done anything, so they're just like, what is he saying? Did he tell me to buy it or sell it? Well, I haven't told you anything.
Transactions in just a few seconds.
Strategy, guys. Strategy. Market's moving sideways. Okay? You can sell this if you want.
Start spot 0.4 million, below the 1.05 million expected. Prior buys a little higher to 1.17 million. Hermit's at 1.28 million above the 1.1 million expected. Prior buys slightly lower to 1.14 million. Securities transactions 12.9 billion versus 5 billion expected in Canada, with prior buys slightly higher.
Oops. Did you sell it? Did you sell it? No? See? Doesn't matter anyways. Do. Yeah, Marks, it's a mess. Yeah. Well, if you wanted to scalp it, you had your scalp. Cool. All right. Just listening to the news. All right. So that's that. US dollar index at the daily central pivot. USD yen down. Euro dollar fallen even more, all the way just hit 112. Some dollar strength, but commodities are doing well today. Mercedes is not a market moving event. No, but it's an event. Euro dollar is way down. And so the big loser today is euro. Everything else is relatively strong, except Swiss franc, but they're, you know, they're ugly cousins anyways. I'm not the German, I'm a Swiss, the German. All right, Aussie dollar, Oscar Mike. Keep your eye, I have this drawn up somewhere else. Just remember. What you gonna do? Boop. Do we have anything else going on there? There's a weekly in there. There's, yeah. Stuff going on. You definitely got your 75.50 if that, or 77.50 if that's what you wanted. May the pips be with you, Mark. Jabel. All right. What else do you guys want to do? What's on your mind? Is it this one? Yeah, you know, like EuroCAD could be interesting stuff. I don't know if you trade that. But why don't I go through? Oops, didn't want that. Come on now. We can go here. Okay, so I still have this going up. This is our support that we identified 2 weeks ago, I think it was. I'm looking at the oscillator, and she's saying this. Still seems valid to me. Oh, does anyone remember me predicting the stock market coming down a week before the FOMC meeting? I don't know if we've ever talked about that. Half the time I can't remember what I said, so that's why I ask you. Very often we talk about things that happen like 2 or 3 months in the future, so I don't know if anyone takes notes. Okay, so the stock market in the United States has been going up simply because we've been doing quantitative easing. What that does is devalue the currency and increases asset prices. Why? Because that's how it's designed. I can show you why, but whatever. But then they stop quantitative easing, and the market, the currency gets strong, but the market keeps going up. Well, because interest rates are zero, we're just not, the Fed's just not buying bonds. So what that so you know, we haven't even begun to normalize yet. So money is still cheap, money is still available, there's lots of credit, there's still low inflation, so there's lots of potential for future profits. But as the Fed begins to raise interest rates, you know, there's just less and less profit. There's still plenty. Like if they raise to 2%, historically that's super low, right? And the economy will still be fine, and we'll talk about the slope of the yield curve will be our conversation. Right now, the yield curve is flat and low. Not much to talk about. So let's say 2 years from now, we'll talk about the slope of the yield curve, and it'll be fine. So right now, we're still very data dependent on the Fed. The Fed influences whether this thing goes up or down. So a week before the FOMC meeting, people take the risk off. It's just risk off. Fed tomorrow lets everybody knows that nothing changes, but the future looks bright. And they're like, all right, well, we got a few more months, and we just move on.com. Now, I believe the stock market will continue going up for many years. I think even if the Fed's raising interest rates, and some experts will tell you, these guys on TV will tell you, the Fed raising interest rates kills the stock market, right? Well, that's dumb. I'd just say, well, prove it. You know what'll kill the stock market is when they stop raising interest rates. But anyways, they'll raise interest rates, the stock market will go up and 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 up. Okay? But we're wondering when that process starts. So every Fed meeting is important. Every Fed meeting is a risk event. And for those that are traders, they're going to exit their positions and stay out until the Fed comes out. Meanwhile, the stock market falls. Great. Why? Because a lot of shorter term traders exited. Meanwhile, 24 hours from now, or I guess a little longer than that, 36 hours from now, mutual funds and traders will come back and say, oh, well, that small decline in the stock market is a nice opportunity to buy, and they start buying. Okay, we just got to keep it above here or here. This is the range that we had last time. Right, every 8 weeks, so 1, 2, 3, 4, 5, 6, 7, 8. So that sort of in here was the last, this was probably it here, the last Fed meeting. Probably, I'm pretty sure that that's the Fed meeting week. So, market drove up until the Fed meeting week, then they got out. It hesitated for a while, and then rallied back up, and whatever. I don't know. Don't read too much into it. Pig yen. There's a lot of interest in the beast. Who else is trading the beast? Yep. Ron likes the Widowmaker. So does Eric. Yeah, she's a fickle girl, though, huh? If you know what you're doing, you're quick on the draw, you can make some pips for show. But look at weekly R1, we touch it. 1 pip, we touch it. Straight down like a ton of bricks. So it's a Widowmaker, or we call it the beast, because if you're an amateur trader and you're trying to make money, and this has your biggest average daily range, so you're going to get on this, right? Oh, yeah. But if you flinch and hesitate because you're an amateur, you'll pay the penalty. And that's that. I mean, I'm telling you. Because, again, an amateur is going to, watch this hit here, and then, should I get out? Should I get out? Should I get out? Should I? Oh, I guess it's going to fall. Sell, 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 sell. Oh, I guess it's going to go up. Buy, 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 buy. It's just like disaster. I'll tell you what. If you took like 100 traders and say, describe your worst day trading Forex, where it was just an awful bath. What was your worst trading day? And then ask them, was it the pound yen? And they'll say yes. So just be careful. Just make sure you have things like patience and discipline, and you know what you're doing and stuff like that. Because you can see it's not messing around. It's tradable. Oh, it's tradable, but you better be good, because if you're not, you will pay the penalty. So as you can see, there's a clear role reversal here. You could buy that. It should be easy, right? But we know as traders, it should be easy, but it's not for some reason. Birthdays are my birthday. No. How does that go? Worst days. Oh, yeah. Worst days are my birthdays. Now I drink champagne when we're thirsty. I'm sure you guys know that song, right? Yeah. Yeah. All right. So you guys know. Now you know. You know. All right. What more should we do? I know. Let's have some fun. Let's go back to the Aussie. Oh, let me log in. Hang on. So, how many people think Aussie dollar is going to go down over the next 2 hours from 77.5? How many people think just over the course of the next hour or two, Aussie dollar is going to fall? Just be less than 77.50. One, kind of do, I guess I'll count that. Don't think so, no. Wow. I think it's going up. All right, so nobody? I asked, huh? I suppose since it's already higher, I guess it's a moot point, huh? Yeah, I was going to do a binary, but we're already through it, so. None of the oscillators are any good. That might not be worth it. So I was just going to do a binary. Do you guys see a short-term trade that I can make using a binary? What do you think I should do? You could have bought euro dollar at 112, for example. That'd be an easy scalp on a binary. Remember, you're only trying to make 1 pip or more. What else? You guys see anything? Long USD CAD? Maybe off the daily central if you wanted, but the hourly looks like it's setting up to come down. No. Yeah, I mean, you could have at like 23.20. You know, it's really yesterday's trade that you missed. But, you know, I don't know, maybe tomorrow. I don't know. It's not good. I'm looking at it. It's not that great. Sell euro. It's got to be higher, though, right? You guys want to do a euro? Really? Let's take a look at it. See, I would have bought euro on a scalp. Let's see, maybe on at 40. But the 15-minute looks like it wants to go up forever, doesn't it? Well, let's ignore that. Wow, it's not great. Well, maybe. Let's take a look. See, look, the first thing I covered today, guys, I don't think I even started recording. I think I was just broadcasting on my screen, and I drew this, and I drew this, and I drew this, and I drew this. I mean, we were right here, yo. I mean, that trade's already been paid, man. I know it's only 50 pips, but I mean, that already happened. I mean, that's easy. What do we do now? Maybe that. Okay. Maybe that. What do you think? Feels kind of late. You know, it kind of feels late to me. Because what I've trained you on is once you make a lower low, sell the lower high, right? I mean, how many times have we yelled hammock? Battle stations, right? Battle stations, battle stations. And how many times have we done that? Not 100, but 30 times? No? All right. How much do you lose? How much do you want to lose? That's how a binary works. How much do you want to lose? If you're wrong, how much you're willing to risk? Give me a number, and I'll tell you what you'll win. 50. All right. So if you shorted Euro USD, you risked $50. You get $91.50 if you're 1 pip right. No, it's a binary option. You either are right and you get paid, or you're wrong and you lose the amount of money you risked. It has nothing to do with pips. You're either right or you're wrong. That's why it's binary. Okay, an option gives you the right but not the obligation to exercise your Euro USD at a certain price. So let's say you bought it, you'd buy a call, and your strike price would be, let's say, 122.29. And you have the right to sell it to somebody else at a higher price if you want to. You own it at 122.96, or you own the right to exercise at your strike price. So 122.90. So if it goes up here, you're correct. You exercise your option, and you get paid $91.50. As long as it's higher than 122, what was it, 112.29, right? So we're at 31. If it expired at 31, I'd get $91.50. Even though I was only up 2 pips. Doesn't matter. You have the right to exercise it, and your right gives you the payout of $91.50, which is an 83% return on your initial risk capital. You say, well, Wayne, that's not even a 1-to-1 risk-reward ratio. Well, when you trade a, let's say, a 50-50 OCO in the cash market, you still have a spread to cover, which would be about the same. So it's about 1-to-1 risk-reward ratio if you were trading like in the market, spot in the cash market, okay? It's about the same. The cool thing is there's no stop management, there's no limit orders. So for example, if you did a 50-50 OCO, how many times have you been up 40 pips and it comes back and knocks you out? Like me today, I was up like 52 pips. I locked in 25 and went back to bed, and I got knocked out with 25. How often does that happen? You're up kind of like 40 or 50, and then it comes out, you don't quite get it. Yeah, like multiple times a day, right? Well, in a binary option, even if you're only up 3 pips when it expires, you'll get paid for the full 50 pips. Because at 50-50, right? So when you risk $50 to get paid $91.50, it's the same if you're doing a 50-50 OCO with mini lots. You get it? But you only have to be right 3 pips, 2 pips, 1 pip, really. And you get paid for the whole kit and caboodle. Well, yeah, just like but if you've been in a trade, let's say for 2 hours and your stop's not a break even, what's wrong with you, right? My stops are usually break even within the first 20 minutes. So if you're not in it for an hour and you're still not a break even, you probably shouldn't be in the trade anyways. You're staring at the wrong trade. Somewhere there's a winning trade, it's just not the one you're on. Okay? So most of the time, very quickly, you should be at break even, right? And whatever. But it doesn't mean you're going to hit your target. Also, I like binaries for scalping the news and stuff like that, because what if you're in a cash trade and the news comes out incredibly choppy and all of a sudden it moves 50 or 60 pips against you in like 5 minutes. It just goes whoomp, whoomp, you know? Well, you can't do that. It wouldn't matter to you with a binary. It could go 200 pips against you. Doesn't matter. You're not going to lose any more money. Doesn't matter. It's the same as, you're just going to lose your $50 if that's what you put on it, right? So you're like, oh man, guess that didn't work out, and you just walk away. Huh. So just imagine it's the same type of trade. I use the same technical analysis. I use the same strategies. Usually I use it a little bit more of scalping. So let's say, let's say my plan for the day was this. What's the likelihood 112 is going to impact the market? I'd say 92% chance you're going to get at least a short-term bounce out of the psych level. So I made a binary along this sucker because I can see on a 15-minute chart this is going to go up for 2 hours. So I kind of set it up and I take a binary that expires in 1 hour. So that if I'm at least 1 pip higher 1 hour later, I'm going to get paid. Pick up some easy money. Meanwhile, I'm just waiting to sell again. So I might be, I might be short the cash market. So let's say this trade here, right? And I believe it, oops, okay, let's say this one. I believe it's going to come down to 12. It's going to come back to the central and drop. Let's say that's what my thought was. So I could be short here, cash, trade it down to the binary, or down to the psych level, binary the sucker long, because it's almost for sure going to go up at least a little bit, pick up some money on that way, but I'm really hedging my short cash position, because the money I'm making up covering the pullback, and then of course continue mission down, and I pick up the extra pips along the way. Meanwhile, I was really hedged, but I'm using a derivative to hedge my cash position. Right? That's very often what I'm doing. Yeah, Sunday, did you trade it? Anish says he likes the Sunday gaps. Yeah, there was a pretty nice one on Euro USD. Yeah. All right, good question. Why not just use binaries all day? Because they sound super cool, right? Okay. If you're going to be in a position for a long period of time, let's pick a different one. I'll give a real world example. Let's do dollar yen. Okay. I think this is going to go up for a long time, but I've been talking about 101.50, which was the third week of August of 2014. We were at 101.50. And just before that, the bottom hit 100.50. See, I remember almost to the day. So, sitting at my desk a lot. All right, so let's just say my theory is this sucker is going to go up. Okay. I can buy a binary for, let's say, 1 year. Did you know that? Cool, huh? Or what if it was Kiwi yen or Aussie yen? We'll do an Aussie yen maybe. Well, how about, no, we'll do the Kiwi. Well, I don't have a binary on the Kiwi. Oh, God. So one of the issues, what I'm trying to babble my way through here, one of the issues is there's very little yield, but yield is important, and if it's not important now, it's important, it will be important in the future. So I'm trying to get, what if you were watching this video 3 years from now? Then I'm trying to help you years from now, not just today, right? All right. So let's say CAD yen, you want to be long. And let me clear this up. Template, scan. Okay. Let's say I want to take this north. If I do a binary, I'm not going to get the carry, which means the Canadian dollar pays a little interest. I'll just make up a number. I know it's not right. Let's just say it's 1%, okay, for the CAD and 0% for the yen, okay? So if this goes up, I get paid 1% yield differential. It's actually income. You're like, Wayne, but it's only 1% a year, right? But let's say you're long one standard lot. Okay? Then your standard lot is 100,000, which means you'll earn $1,000 in interest for the year. It's nothing, right? Well, the issue is you only risked $1,000. Mess that up, okay? You only risked $1,000. So now is it statistically important? If you can stay in that trade for 1 year, it'll pay for the trade just in interest. I would call that statistically important, right? Nikolai, yes, the answer is yes to that. So, but what if you're long Kiwi yen and it's paying 3%? Now, you've made 300% return on the investment, and you haven't earned any pips, so you've only collected interest. If you can stay in the trade above break even for a year. You understand that? So it's statistically important. And there was a time when the Kiwi yen paid 8.5%. So imagine making, almost 1,000% return on investment. That's what it was when I was trading. I mean, it's significant, okay? How much interest do you get paid on your binary option? If you had a 1 year binary option, and I think they have 1 year, but you can basically get very long. And the way that you do that is you go to long-term binaries, and it's all done in European numbers, so I can never figure that out. So, so this is the end of the year, the 30th of December 2015. So it's not a year, but okay, to the end of the year. Okay? So you don't get any interest on a binary option. Now I could just be long and holding my stop at break even and just leaving it long, getting my interest payments every single day. 7 days a week I'm collecting interest to the tune of $1,000 a year on a 1% positive yield differential. Okay? That's not bad since I'm only risking about $1,000, right? Great. So, how much money do you want to risk on your binary option? One standard lot costs you about $1,000. Do you want to throw down $1,000 on your binary? Why not? It's the same thing as a trade. Okay, fine. So if you are correct, how much money would you earn? You get a 77% return on investment, which is equivalent to 77 pips. But if I'm in the cash market, I've made $1,000 in interest. And what's the likelihood that my cash position is more than 77 pips profitable? If I'm in it till December 31st, let's say, and I'm long CAD yen, my stop is never hit, so my stop's at break even, I'm making money, December 31st, what's the likelihood I'm only up 77 pips? I haven't been busted out. Okay, I'm positive. I get busted out of break because I have proper trade management skills. But I'd say I should be up 5 or 6 or 7 or 800 pips if I'm in it that long, right? I think the odds of, if I made 77 pips on that, I'd be, very upset. But at least I made 200% return on investment because I also got paid in interest, right? But most likely I'd be up 500 to 1,000 pips. Okay? And that means I have $10,000, let's say, in pips plus $1,000 in interest. And the binary, I'm up 770. And I'm up 11,000 in the cash market. That's why I don't trade it all day, every day. It has strengths and weaknesses. I use it to hedge my cash positions, and I use it to scalp, where I don't have to manage the trade. Because sometimes, like, I just, I'm a busy guy, right? With a body like this, and a face like that, I'm in demand, yo. So sometimes just be bothered to manage the trade. So I'm like, I'm going to throw down a binary because I don't want to sit here moving my stop. Like I said, over the course of 20 minutes, my stop's usually at break even, but I've moved it 3 times in those 20 minutes. What if I don't have the time? Like, I can't be bothered. I'm just going to throw down a binary and just pick up the easy money and come back after breakfast and be a little bit richer. So that kind of thing, right? So again, scalping, love it. Particularly around news events when there's undue volatility. I get rid of a wide spread issue. I get rid of slippage issue. All these different things I love binaries for. Don't have to manage the trade. I'm a hero or a zero. Doesn't matter. If I'm a little bit right, I get paid for the whole thing. But meanwhile, I'm probably short-term short, even though I'm long the binary. So I'm hedging using the derivative. Okay? How does that smell? I think it's been another 90-minute session. You guys inspire me. Yeah. So thank you. Thank you for being on my team. I already know all this stuff, so it'd be really boring just hanging out by myself. So I thank you for being on my team because I like to share, but it keeps me sharp. Because, when 60 or 70 of my, closest trading friends log in the morning, I have to be prepared. So I was up at 2 o'clock in the morning trading and went back to bed, got a couple hours sleep, still had to get up at 6:30 in the morning, still have to shower, still have to eat my breakfast, still have to review the markets and read the news, because I want to make sure that I have alpha for you. I want to leave you with something positive every single trading day, whether it's technical analysis, fundamental analysis, trader psychology, or at least even a chuckle to get through the boring days. I'm here for you. Thank you for being on my team. I'll see you tomorrow. And if you ask me nicely, maybe we'll trade FOMC together. Huh? Anybody like that? So I'll just make it a 22-hour trading day then? Great. Yeah, but it's fine. So just remind me tomorrow. I got a lot going on, man. I get scatterbrained. Sometimes, the last couple of meetings, I'm like, oh, I should have done that with the team, the FOMC thing. But it's so in my routine after doing this for 14 years or something. I just forget. So just please remind me, and yeah, I'll do my best to clear my schedule, and we'll get together and we'll trade FOMC together. As my way of just thanking you for logging in every day. Maybe you can bring a friend too, huh? Cool. Yeah, but ask me tomorrow and we'll set it up. But yeah, that's right, Nikolai. The announcement comes out at 2:15, all that kind of stuff. But just remind me. I can't, I have to check my schedule and all that, but I'm sure I can make it up. I'd put a binary on it. Peace on earth. May the pips be with you. May your profits be above average. If you're having trading problems, I feel sorry for you, son. I got 99 problems, but a pip ain't one. Please leave a like on the YouTube video, guys. Cheers.